So welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today, the all-important CPI data was released, and it was a shocker. So we'll take a look at this, what happened, and how markets reacted to this. Plus, we'll show you our current positions and a trade that I took yesterday, and we'll show you of what this is all about. As you can see, there's a lot to talk about, so let's get started. Oh, before I forget, if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we are real traders who trade live accounts. And we got a shit ton of trading experience, and we're showing you how we trade these crazy markets with our live accounts. And trust me, we know our stuff, and we're not too afraid to tell you like it is. And if you're looking for some honest insights into the world of trading, you are in the right place. So before we dive in, show you our trades and what we are doing here, let's take a look at what's happening in the markets, Mark. And geez, this morning it's fireworks.
It is, Marcus. I mean, what a day. You see the Nasdaq composite there gapping higher, pulling back a little bit, but now trading back near session highs. And this was all about a number or two numbers that came out this morning.
Yeah, and to really appreciate what happened here, you have to take a look at a 5-minute chart of the E-mini Nasdaq futures, because this is where we see this dramatic move. Like in overnight trading, we were just diddling along, moving higher this morning, and then the report was released and kaboom! So let's take a look at the report. So this is the inflation report, right? This is the CPI. So taking a look at the economic calendar here for today, here we see of what happened. Oh, Mark, are you still there? It seems.
Yeah, my internet is being tricky. I'm going to try to close something, but if you can hear me now, we see that CPI number, the CPI and core CPI actually coming in lower than expected, 0.3% on core CPI, and CPI coming in with no change. And it was expected to be 0.5 on core CPI and 0.2 forecasted for CPI. Core CPI, of course, excludes energy and food prices, which tend to be more volatile. But this was a positive surprise for the markets.
Absolutely. Now, this is where at first the markets were just saying, yay, let's go. And I mean, they have been going pretty much since the open. There was a little bit of a pullback here, but right now we are making new highs for the day in the Nasdaq. Very similar picture here in the S&P and also in the Dow. So we are right now off to the races. However, let's just see of why that is. And this is where we are going back to the FOMC statement. This here was the FOMC FedWatch tool from CME Group about the next meeting, what market participants are expecting. And market participants were expecting a 67% of a 0.75% hike and 32% of a 0.5 percentage hike. And this is what has kept the markets lower and nervous here over the past couple of days on the edge. And then the report was released, and let me show you a magic trick. Boom, it flipped. So this is right now, I took a screenshot this morning, and right now this is where market participants think that, okay, the Fed is probably slowing down a little bit on increasing interest rates. And this is why the markets are reacting positively to this. What do you think about this, Mark?
I mean, it makes sense based on this positive surprise. Are we at peak inflation, and is it coming down? Is this just a sign of things to come? And if so, the Fed can be less aggressive with interest rate hikes. However, there's still a lot of data to digest. We have PPI data tomorrow. There's also another CPI number and PPI number and PCE, things that the Fed will take into consideration, as well as another jobs report before their next meeting, September 21st. So there's a lot of time between now and this reaction and September 21st, but at least for the time being, traders are expecting the Fed to slow down with their rate hikes.
Yeah, and just looking a little bit at a chart here. So this is the year-over-year change in the consumer price index in the CPI, and we see, oh, there's this little dip. So is this now where it means that inflation has peaked, or do we see another uptick as we did when at first we were going lower in April, and then in May and June we were ticking higher. So still a possibility. Energy prices will play a factor in there, and we'll see what happens there.
Yeah, and that's the thing. Everybody's expecting that we won't have an uptick. So if we do, it could be devastating for the markets, right? It feels like this should be the end because prices are so high. And this report, I honestly thought a little more was priced into the market, a little more positive news. It was a surprise, but I thought more was priced into the market. So I didn't expect this strong of a reaction. But hey, you trade what you see, not what you think, and markets are loving it.
Yeah, and also this morning, the VIX, the fear index, below 20 for the first time since April.
April.
So,
Yeah.
first time in many months that we are here below 20, which basically says, okay, no fear. And when there's no fear in the market, the markets do what they like to do. And this is going up and moving higher. And that's what we see here. I mean, the Nasdaq now up 2.7%. So, that's doing well. Also doing really well for our positions. Let's talk about these, shall we? Or do you have something else that we want to talk about when we talk about
No,
the
that
market?
sounds great. But I would agree. Fear has left the building on average over the last 10 years. The VIX is around 17 and three quarters. So being around its average for such a long period of time, that puts us back at normal levels when we dip below 20.
Yeah. All right, heading over to PowerX Optimizer, looking at our existing positions. So we talked about it. NVIDIA is one of the positions that I have, and this is where I was assigned at 195. Since I sold a bunch of calls and puts, my break even is at 177.75. Over the last couple of days, NVIDIA has been slumping down because they issued a warning, and then Micron issued another one, a revenue warning that is ahead of earnings, which is in a couple of weeks here, so still some time. So moving lower, but this morning here, in line with the overall markets, up 3.5%, which is really good.
Yeah, my AMD position up 2% plus. So this is similar to highly correlated to NVIDIA and experiencing the same pullback, maybe not as aggressively, but semiconductors after such a huge run up, you mentioned it yesterday. A pullback here would make sense, but it was also coupled or combined with that guidance for earnings that is expected to be a little worse than expected or slower than expected with NVIDIA. I'm still in this trade. I saw a comment yesterday about me closing it. No, we talk about our trades every day. So I'm still in this one. And I'm looking to move on. But Marcus, you're a little more bullish with NVIDIA, right?
Yeah, so NVIDIA, I'm planning to sell calls above my assigned price so that I can take advantage of a stock move. Very, very similar to TPR, another position that I'm in. So here assigned at 37, and I'm actually looking to sell calls at 38 so that I can participate from a higher stock move. I have 2,700 shares of this, so a move of $1 here would give me an additional $2,700. And the reason why I'm looking at this, so if we look here at the earnings analysis that we have implemented, we see that TPR over the past, let's see, 7-day price change usually has a surprise to the upside. You see, last time it moved up 18%, moved down 2.8%, moved up 8%, moved down 0.5% over the next 7 days. So this here makes me very hopeful that we might have a chance for a significant move of 15 or 16%. And on average, it has been just shy of 12%. And therefore, I would like to take advantage of that. That's why right now I'm not interested in selling calls at my assigned price, which we usually do, but also here above. Same with NVIDIA.
Sure. And so, based on your earnings analysis, the earnings analysis tool in PowerX Optimizer, you're basically saying, hey, if there's a negative reaction, it's going to be somewhat muted compared to what could be a nice positive reaction, at least based on the last 6, 7 earnings releases. And, just looking at the chart too, Marcus, if we get through 35, 35's acted as strong resistance. If you get through 35, I think this can finally take off.
Yeah, it seems so, because it seems that it was very comfortably trading in the range between 37 and I want to say probably 48 here. And I do believe that TPR will go back in this. So is it a gamble what I'm doing here? I wouldn't think so, right? Or I don't say so. I don't think so. There we go. Because this is why we use data, you see. And if you look, the last earnings surprise to the downside was in April 30th, 2020. Well, we know what happened in 2020. So the reason why it plummeted there 18% is not because of earnings, but because of the COVID crisis that was in full swing, the downturn there. And other than this, the last time it really had a surprise to the downside was in 2019. So it's been quite a while, usually rather positively to earnings. And this is why I love to have data to base my
Yeah,
decisions on.
sure. It beats flying blind and just hoping.
Yeah. All right, let's talk about a trade that we did yesterday that is working out really, really great. So yesterday we had Macy's popping up on the scanner, and Macy's popped up with a strike price of 17 and also 16.50. And again, the question is, do we want to own Macy's? And we said, yeah, we have been trading Macy's in the past when it was trading in this range between 22 and 28. And right now, it seems that Macy's, after the downturn, has found a new range between 17 and 19. So we said yes to trading it. And then also, are we comfortable buying Macy's at the strike price of 17? For me, it was a heck yes. For you, it was like, yeah, maybe.
Yeah, I went the conservative route yesterday, and I decided to try to sell the 1650. And at 10 cents, it looked like I was potentially able to get 10 cents. And I want to say the ROI was around 60 or something like that. And it didn't happen. It didn't happen. I was the offer for, we kept hitting that offer, but I was not filled. And it ended up being that 17 and you got 15 cents. There was up to 20 cents available during the day.
Yeah.
Um, I almost adjusted, but I didn't. So I missed this one.
Yeah. So I sold the puts at 15 cents based on my account size. This is trading 71 contracts here for a premium of 1,065, which for a 3-day trade is not bad at all because this is expiring on Friday. So the premium per day, as you can see here, it's actually a little bit less because this is already counting today. This trade did happen yesterday. So I did take in this premium. It is not 106% because yesterday we had 4 days to expiration. Yesterday was Tuesday, so Wednesday, Thursday, Friday. No, it's still 3 days. If we count yesterday, it would be 4 days. But here, a solid 79% annualized, and we'll see. I'm actually right now considering closing this trade. As of this morning, this option has been traded at 3 cents. So if I can buy it back for 2 cents today, I will, and therefore leaving a little bit of profits on the table. But instead of 1,065, I'm making $958.50. But here's the deal: I'm freeing up some buying power because right now I'm tying up $120,000 in buying power on this trade, and I don't mind freeing up the buying power. I wanted to get actually, I mean, we both wanted to have some positions available in our portfolio going into today because we knew that today would be a day where the markets are moving. We just didn't know if whether to the upside or the downside.
Sure. And yeah, I think it was a good trade and buying it back. I mean, this is where, yes, you're giving up a little premium, but the premium per day has definitely changed. I mean, you're basically locking, if you are to close it at 2 cents, you've gotten 8 cents in one day versus a penny for Thursday and a penny for Friday, right?
Right.
So this is where I'm a big fan of closing at 90% of max profit because it frees up that buying power, or potentially if you get out at 2 cents and then the stock drops again, you might be able to get another trade on.
Right. So the other trade that I have working right now is TPR. And since I own a position in TPR, I'm trying to sell calls. And again, my idea here is to sell calls above my strike price. So instead of selling the 37, I'm selling the 38. And as you can see, if I would get 35 cents, I would make 34% annualized. I'm a little bit more bullish on TPR. So this is why I put in an order for 40 cents, which would give me a whopping $1,000 based on the 2,700 shares that I have, because I can sell 27 options here. And so I like this $1,000. Let's see what TPR is doing here right now. If this is also moving higher with the overall markets, not quite. It's not making new highs as we make in the indices. So I might lower this to 35 cents because I'm okay getting here, instead of $1,000, getting $950 and getting 34% annualized. So I might do that.
That would work for me.
Absolutely. Now, if I would go out to the 37, I would not make any money on the stock. Again, as you can see here, it's not 75 cents. This was a couple of days ago. Probably right now I'm closer to 50 cents that I could get. So a little bit more premium there, but I'm missing out if the stock really makes a nice move to the upside. And this is where I, instead of bird in the hand, I go for two in the bush of potentially making $3,645 versus only $1,350.
Yeah, and it looks like it would be 50 cents. I just looked at an options chain. So 50 versus the 40 or 35. Yeah, I think you're doing a good job going for the 38.
Yeah. So this is where the calculator helps you tremendously to make a decision of whether you should sell a call right at the assigned price. And you see, you can even use this for covered calls, right? So if you do have any existing position, you can see, okay, how much can you boost your profits with the stock by selling covered calls? Because that's basically what it is. The wheel strategy consists of 3 steps. Number one, we're selling puts. That's what I've done with Macy's yesterday. Then when we do get assigned, we're selling calls. If we do not get assigned, then we just keep selling puts. It expires worthless. So step number one, sell puts. Step number two, you might or might not get assigned. If not, go back to step number one. If you do, go back to go to step number 3, where you're selling calls. And again, if you would like to know more information, we'll put a link to a video in there. And there's also, as you can see in the background, somewhere there, the book that you can get. The link is in the description here. So overall on the scanner today, Mark, not a whole lot going on. I mean, we only see 3 symbols here, and we already said no to AKAM. Let me just go back here to the chart. We said no to Schlumberger, and we definitely say no to Pinduoduo because that is a Chinese stock. So not surprised, because in order to get a lot of premium, we need a down day. All right, that's probably where Mark can't hear me right now. Okay. I don't know. Something is wonky with the internet. Could be yours, could be mine. Anyhow, so no new positions today. Yesterday, the Macy's. So right now, I have 3 positions in this portfolio: the NVIDIA, the TPR, and the put position against Macy's that I'm trying to buy back today. Otherwise, I will let this expire worthless. By the way, if you have any topics that you would like us to cover in these Coffee with Marcus and Mark, leave a comment right below and let us know what you want us to talk about, what you want us to show, maybe on the software or just in general, and we'll be happy to take a look at this. So we're collecting all of the comments, and we will cover them in the upcoming Coffee with Marcus and Mark. All right. Mark is smiling and nodding at this point. All right. So if you would like to learn more of how we trade these crazy markets, by the way, if you would like to know how my account is doing, take a look at this. I did an account update yesterday. I'll link to the video right here. Check it out so that you know how we are doing here thus far for the year. And then we'll see you again tomorrow morning. And Mark would usually say,
I'm trading, everybody.